Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast. This is your roundup of companies making news on Wall Street and beyond, harnessing the power of Bloomberg data.
Let's take a look now at some of the stocks on the move today. We're joined now by Bloomberg's Natalia Knežević, Bloomberg Equities reporter. All right, Natalia, what are you watching?
So let's start with Nvidia. CEO spoke with FT. He said that the company will spend hundreds of billions of dollars on new chips, other electronics. The key takeaway is that the company is trying to move forward and make sure that supply chains are stable, and the company will be able to produce more chips in the United States. What is interesting is the stock is relatively flat, and it's getting more and more complicated for Nvidia to impress investors and analysts. We saw huge outflows out of the stock across institutional investors. But I have to say that one group of investors keeps buying Nvidia no matter what. Retail traders.
Retails.
Every time they buy the dip. Two stocks, not a huge surprise, Nvidia and Tesla.
We hear that from Eric Balchunas when he comes in to talk to us about the ETF business. That their ETF flows continue to be positive. Even when the market was down 10% this year, ETF flows are positive. Small or individual retail investors are buying.
Exactly. But potentially one of the reasons why we don't see such a big impact from retail investors on Nvidia stock is because their exposure to U.S. stocks is already at almost record high.
Mm-hmm. Yep. What else are you looking at?
Yes. So one company from the retail sector, it's called Five Below. The stock is up by 7% today. This is a so-called specialty value retailer.
It's like a Dollar General, but similar, I guess.
Exactly. So they sell small things like phone cases, headphones, pet products.
It's a really good place to go when you're buying cheap stuff, but you want it to look a little nicer than Dollar General for your daughter's birthday.
Oh, that's how it figures in.
For me, at least. Anyway,
yes.
Go ahead.
So this is why it's interesting. We saw that results came above expectations, but again, it's getting more difficult for companies, especially retailers, to impress analysts. We saw two downgrades from Barclays and Morgan Stanley, and analysts are saying that huge headwinds we could see from tariffs, and again, it's guidance, sales is not enough to, beat.
I mean, we're seeing that. I'm hearing that more and more, I guess I should say, as it relates to the retailers. Analysts downgrading the stocks because they say, I don't know what's going to happen on tariffs, but I know a lot of these retailers got a lot of their stuff from China, and I just know we kind of have a sense of where the existing tariffs are in China. And if anything, they might even go higher. I'm out of here.
Right. I mean, and even the companies that tend to be loved by folks that like retail stocks like Costco, there are also questions there too. Like in a slowing economy, that's going to get hit no matter what. Not even layering in any exposure to China, of which they might have very little, but nonetheless, that puts perspective for Five Below. What else?
Carvana. The stock is up today by 8%. That came after Piper Sandler analyst upgraded the stock to overweight from neutral. And this is why I think it's interesting. Analysts said that basically used car companies that sell used cars are kind of protected from tariffs because demand is local, everything is already here. And so analysts at the same time downgraded Stellantis, Rivian. So we see this big spike in Carvana, and you might be surprised, but on a 12-month basis, the stock is up by almost 120%.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.